Production.
What is poppin'? So we're gonna quickly go over the Nasdaq, the S&P, and the Dow Jones, just to get a quick glimpse of what's going on in the overall markets, right? So I find it really interesting right now. I don't really think there's anything super significant going on in the markets. It's kind of like this dull period. It doesn't really look like the bulls have been in control at all over the past few months, right? The bear has been shutting us down consistently, and they've been continuing this downtrend. So we'll start from like, what's this, January, and you could see, right, high, low, lower high, lower low, lower high, lower low. We're in this like kind of like gray area right now, where are we going to come pop up over this 8 EMA? Are we going to get shut down at this 8 EMA right now and then continue down low, right? These are a few possibilities that I'm looking at. And this is going to be very similar for all three, right? The S&P, the Nasdaq, and the Dow Jones. So what I find interesting over these past 2-3 years, right? You look at the moving averages and you look at what happens when we get a bullish cross, right? We have the 8 EMA and the 20 EMA. These are the two I probably use the most. But the 8 EMA and the 20 EMA and their relationship with each other in a bull versus bear market, I think it's pretty interesting. So again, the 8 crosses over the 20, and then we use the 8 and the 20 as support in a bull market. Now, along with that, you see these indexes, these stocks, ETFs, whatever you want to, cryptocurrencies, whatever you want to chart, you'll see that when those conditions are true, so the 8 EMA and the 20 EMA are being used as support, the 8 is crossed over the 20, and you start to see like the aspects of an uptrend, right? Higher highs, higher lows continuously happening. Whereas the bear market, you see lower highs and lower lows, and the 8 EMA crosses under the 20 EMA, right? So this has happened here. The 8 crosses under the 20, and now it's being used as resistance, right? So again, I'm on the weekly time frame, so these candlesticks, they take a full weeks of trading to develop, right? So from Sunday at 6 p.m. to Friday at 6 p.m., this chart that's what it takes for one candle to develop on this chart. So it's interesting to look at. I think it's a pretty prominent chart when it comes to all this stuff. Again, we want to zoom out a little bit further, and we got that cross under on the bearish cross on the monthly chart as well. So we might see some continuation to the downside, even though what I'm thinking might happen is there might be a little bit of relief in the next couple weeks. We might see these indices cross over the 8 EMA and look for that little brief, hopium in the market. And then once we get up to the 20, we get that rejection continuous downward, right? So that's something I'm looking at over the next few weeks, what could happen, because again, there's nothing really significant going on around the world. It's all very much still bearish in terms of there's recession news going on. There's shortages in, shipments and like the delays with products being shipped out, right? Companies are still not up to date with having enough products for people. You see inflation going on and higher housing prices are kind of interesting right now, right? What's happening with that? We see the hikes in interest rates continuing to happen, right? All these things are happening, and that is basically what the government, or whoever you want to call it, the Fed, whatever, what they're trying to do is they're trying to take money out of the system, right? Because when you print a bunch of money and put a bunch of money directly into assets to pump the assets, eventually things get too easy, right? That's where that term comes in, where I'm shitty with terms, but it's like once the tide runs low, you'll see who's swimming naked, right? So essentially what that means is you'll see that there's a lot of the money in the market. It's been too easy, right? It's just people using too much leverage, or it's people pretty much who don't know what they're doing, putting their money into these stocks with this consensus and this huge wave of people also doing the same thing. And now that the Fed or the government is taking away money, right? Essentially shorting stocks, essentially selling a lot of these assets down. You see that, right? There's people who are holding stocks at the top and they don't really know what to do. And as people sell and sell and sell, it creates this cascade of a downtrend or a bearish market, right? That's the easiest way for me to explain it in terms that is easy for me to understand, right? So this is what I'm going to be looking for, right? I do think that we've come, right? It's the summer. We've come down quite drastically since January. Let's see, right? We're down. We've made 24% downward over the past 168 days. So that's what, 6 months and a bit. Right now, if we're talking about exactly where we are right now, we're around 20% down. Again, bull market support with the EMAs, bear market resistance. So we might get that push above, right? Just like you look back here, we get that break below the 8 EMA a couple times here, but then we come back to the 20 and it's used as support. Where I'm thinking the same thing is probably going to happen here, right? We're going to get this bullish relief in the market. We get the pump that brings us up towards this 28 EMA, the 20 EMA, and then we get shot back down, continuing the downtrend, right? Again, though, right, it's always good to keep in mind that, like, if you have conviction on some names, right, and you're like, holy cow, look at, for example, maybe it's Amazon, and you're like, holy cow, look at this discount on Amazon. It's never a bad idea to dollar cost average over a very long period of time, like many years, right? If that's your strategy, then it's really never a bad time to be investing, right? But in terms of looking for the opportunity to catch those huge trades, there's going to be some, but I don't think it's nowhere near the bottom of the market, right? So that's what I'm kind of looking at on the S&P, right? Again, this zone right here that we have marked out, this is around the 41 to 4200 zone. That could be used as a resistance in the coming weeks if we do break up above the 8 EMA, right? So again, same thing, a little bit more visually enticing here on the Nasdaq. Look what happens, right? Bullish cross, support, 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 support. And then eventually we get the bearish cross, right? The bearish cross, the 8 goes under the 20. And again, resistance, resistance. What's happening here is it looks like we're coming up over that 8 EMA, right? Again, if that doesn't happen, we'll look for that continuation to the downside. That would continue this trend downward, and that would probably bring us near this support around 10,777. So that's kind of like what I'm looking at when it comes to the Nasdaq, the S&P. Pretty much the same thing with the Dow Jones, right? There's really nothing too significant that these charts are very similar, right? These markets have been in a bear state for a few months now, and there's a lot of fear in the market. You're starting to see, like, you don't see the demand like there was back in 2020, right? Remember at the bottom of the, look at the demand here, where you might not see it in the volume until later on, but like people were driving stock prices up, where now you really don't see that. People are very shook, like nobody really wants to invest in the market. So this is kind of a little gist. We'll say it's a generalization of what I think is going on in the markets right now, and a few things that I'm kind of paying attention to and looking forward in the next few weeks. And majority of these, again, keep in mind, are on the weekly time frame. I feel like that is one of the more important time frames in terms of a more broader picture idea of what's going on. But again, we'll be looking for this bear market to continue, and if we do see any signs of a bull market, it'll be when we do see this bullish cross on the weekly time frame, right? So that's the breakdown for the overall markets here. Peace.